Hello, welcome to another episode of Daily Market Mastery with me, Christian Rauchenwald, on this Monday morning for people in the US, for me, afternoon. I hope you all are having a great start into the new week. Unfortunately, today I'm a little late because the countdown that I used to determine the market open, so we had the time switch between summer and winter time in Germany. And as you can see, the countdown that I used or checked for market open actually says in 30 minutes, whereas markets are already open. Now, that said, before we actually continue here, as always, let's get the usual disclaimer out of the way first. Everything that I share in this live stream / video is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. Besides that, all the tools that I'm using, so the broker, the charting software, the strategy I'm following, and so on, are all linked in the video description down below. And the one thing I always recommend, if you haven't done so, is to check out the Elliott Wave Principle. You can read this book online for free when you use the link that's in the description down below. Now, with that said, we can actually jump right into it, and I just need a second to, up on the other end, log in somewhere. Come on. And then where do we go? We go here, and then we go here, and we go here, and then we open that. And yeah, so as I shared in one of the previous, not one of the previous episodes, but at some point in the past, I'm trying to get my personal assistant to keep track of specific predictions to make things easier. And I'm just going to open up the sheet that she initially created, and we'll probably manually try to also keep it updated for now. Anyway, so for this week, what's relevant on my chart? First of all, I already made a task, so I update my calendar event for the stream to actually use the New York time zone instead of mine. This should, in the future, hopefully prevent missing the market open like today. Outside of that, we have our usual $30 GameStop calls that expire this Friday. We have an order to buy them back for $1 a piece. I would not go to $2 a piece here because they are already paying relatively little. So we're looking at $30 or not even $30 for the week in premium. We have our Grab Leaps call that expire in January 26. We have our Novavax calls that expire in January 25, where we wrote calls, so we got a premium here, also not a lot, $25 at the 45 strike price, and we have calls that are unfortunate at the loss because my labeling was slightly off, as we covered in previous episodes. However, that doesn't change my long-term prediction. And we have shares in Barnes & Noble Education, Cost, Immersion, and GameStop, which we use for our covered calls. All the other shares, so Faraday Futures, SunPower, Greenwave, those were kind of like small gambles on trying to determine the pattern and catching predicting the bottom and then being wrong about that. Thankfully, the amounts in those positions are not that big. As we can see, we have a slight plus today, so we're starting the week slightly positive, but we're moving sideways already for a couple of weeks. So anyway, let's jump into it. Let's take it from the top. Barnes & Noble Educational or Education. As we can see, I actually have a bullish outlook, you cannot see this right now, but the overall outlook that I see is this, where either this becomes an ABC pattern, in which case we should reach at least 14.19. I'm going to update that in the sheet that I have over here, 14.19 or 19.76. So that would be if this turns into an ABC pattern, where we then go further down from here. Or this is the next 5-wave impulse, in which case we actually would talk about higher profit targets. Now, also going to update that 10, 28, 20, 24. So and the current price of BNet is 10.13. Okay, so now we have that. Okay, so not much changed here in Barnes & Noble Education. Got it. Okay. We have basically what looks to be wave 1, wave 2, wave 3, wave 4, and wave 5. Maybe not finished yet, which means we might get another push down here a little bit, but then we should see the next waves upwards develop. So short term, there's a little bit downwards room possible. We entered based on our prediction A, B, C. Here we have some shares that we got earlier that were not FOMO, but basically rushed buys. But overall our exposure is not that big in Barnes & Noble Education anyway. But we predicted that the most likely turnaround point would be here at the 61.8 retracement, which also marked, we had a range of like $8.42 down to $8. So this was the range to enter, and we actually entered at $8.45 under the assumption that we might maybe not fully touch the 61.8 retracement. We also manually added a few shares here, and as we can see, that's pretty much the turnaround point. Now, I'm not always right, but this is one of the occasions where we actually got it pretty right. Now, the question obviously is going to be, how far is this going to go? If we potentially already finished our first wave up here, then we would expect now to at least go down to 985 and worst case 923. So there's no guarantee that we finish this, but from a rough glance, this might be wave 1, wave 2, wave 3, wave 4, wave 5. Although wave 5, as said, would not or could potentially be incomplete. So this would then look like this. We can see we would have reached a minimum target for a fifth wave, but the maximum, or maximum in quotes, we can also sometimes exceed this, but the maximum target would be still a little bit higher. So it's also possible that this fifth wave is not finished yet and that we first get a little bit further up before we then correct. Now, if we were to go further up to the maximum target, for example, we should still then the corrective wave that follows it get down into the area of 1031 again. So even if you don't enter right now because you're hoping to enter better in between 923 and 985, and somehow this doesn't work out, well, then you still should get the chance from here and the correction down to again enter at roughly the similar price levels that we have in the future. The only case where that would not happen is if we actually exceed our 100% price target. We can also use Kennedy channeling technique here, in which case the target areas, or target areas are a little bit harder then, but basically we would expect to reach at least the median, which we obviously already have, or the top of this destination channel, usually a top and potentially with a small break through the top. So if this fifth wave is not finished, I think we'll still in October will get to see it finish. So again, if this is not the full fifth wave, I think again, or I believe that then in October we still would see the small break here that also touches the 100% target in this case. Either way, long-term outlook didn't change. So there's still the option that I'm wrong, of course. Yeah, like we always have to consider that as well. I could be wrong. Undo that. Let's get rid of, no, actually, let's keep that for now. So, but what do we not need for now? That goes, not now, that goes back here. No, that goes back here. And that we actually remove for now, yeah. So that's that, and just checking here, let's say 8 minutes, so 0, 0, 0, 8, 0, 0. Horrible. 0, 0, 0, 8, 0, 0. So like this, for example, yeah. And that will be from today's stream. Can I copy the link from somewhere here? Copy video URL, okay. And that would then go here, and that one here would be empty for now. Empty, okay. So that's about that. So as said, Barnes & Noble Educational, short-term, potentially further down, a little bit into the retracement areas. Long-term, I think we go at least to the $14 mark. So that's like 40% still upside here. If you already made your positions based on previous streams and so on, but again, I'm only sharing my personal opinion, so don't bet your house just because I'm saying I believe we will turn around here. But if you entered where I did, so at 845, or maybe here where I manually entered a little bit bigger, or not a little bit bigger, but increased the position, then you should potentially, obviously, already have a stop loss in place that is in profit. You would, however, have to consider that if we finish this first wave, we might now get a correction that gets till down here. Potentially, it could retrace 99%, which is obviously tricky to know. Either way, if we retrace more than 78.6%, that would be a sign to get out of the position, because then better to take still a very, very small profit from 845 in our case to, for example, 881, than to risk being wrong and suddenly having a winning trade turning into a loser. Don't forget, nobody ever lost money by taking profits. Now, moving on from Barnes & Noble Educational, next thing on our list is actually going to be, let's see what we're going to look at next. Actually, GameStop, yeah. I think nothing changed here, so we're still moving sideways. The big question still is, did we finish the corrective pattern at this low point, or will we still get a push to the 78.6 retracement? Long-term outlook is bullish. Short and mid-term outlook, considering that we're looking at the daily chart, has the possibility that we again, as said, go down into this area first. Depending on how it plays out, it will also affect the next price target. So therefore, while my long-term outlook is bullish, my short-term outlook has to consider that we might get that push down first. So we're just waiting, and we'll have to see how it plays out. Grab asset, here we have an option that expires in January 2026. From the looks of it, we can see we have 1, 2, 3, 4, 5. Auto labeling thinks it's not finished yet. I can imagine that it is also subdivided as 1, 2, 3, 4, 5, so that there's still a little bit upside. It looks like we finally finished the corrective pattern that we've seen for years, basically here, and that we actually bottomed here. I don't recall exactly when we entered. It was already a couple months ago, but overall, like, doesn't really make a huge difference. Till 2026, I believe that we should be much higher, especially considering if we are indeed now in the third wave territory. The third wave usually tends to be the strongest. Now here we're looking at a weekly chart, which means we are talking about months for this third wave move to develop, and I would expect it to reach the $9.40 to $10.88 mark here. Now, I'm seeing Grab is not on my list here, so I'm going to update that real quick. 1 second. So current price 417, and prediction would be 942 to 1088 from today, 10/28, 2024. Oops, 10/28, 2024, and center that stupid text. And time, around, what's that, 12 minutes, yeah, so 00, 12, 00, and it's the same stream as the last one, so yeah. As I said, I'm working on getting my assistant to do those things, but since we only spent like a relatively little time every day together, it's still taking us some time to prepare the file properly and get into the flow and so on, yeah, so that we basically have a better way of tracking previous predictions. When I first said a prediction, when I changed it, where I was right, where I was wrong. Anyway, moving on. So Grab, as said, looks like this, and that brings us to Immersion, where we are still waiting. It looks now, we're still waiting for the break of, what was it, 898. So we reached 897, so we're 1 cent short of, in quotes, like a semi-confirmation that we finally bottomed here. Now, full transparency here for Immersion, I actually got it wrong twice. Initially, I thought that our correction bottomed here because we touched and were grinding along our base channel. Plus, we got this nice spike here that was already an indication for we're done. However, we were not done here, and it looks more like I had to update my labeling accordingly to say, okay, likely the correction is not ABC, but like this ABC. And then I got it partially wrong a second time because I figured that we might actually have our bottom here where we touch the 100% expansion level and we're around the 61.8 retracement, just to be slightly proven wrong. Now, obviously, this here was a bigger oversight that we get that push down. But on the other hand, if one would have entered based on that assumption with a trailing stop loss, they would have still made a profit here and not a pending loss like I in my position. Either way, right now, there visually might still be a wave to come. However, now it becomes already unlikely because originally it was like 1, 2, 3, 4, maybe 5 still to come. Now looking at it, we probably have a truncated fifth wave or an 817 and 817, or actually a fifth wave finishing here, which means visually it looks like we are now looking at the next 1, 2, 3, 4, 5. Yeah, there's still a long ways to go, but overall I'm quite bullish here. What would be the profit targets? I'm gonna wait with that until we actually break the 898 mark, so we have our confirmation that we're waiting for. Personally, I would enter, if I wouldn't have already a position, I would enter at 898 or 899, because that would be the point where it's impossible that this wave down here hasn't finished. Now, that doesn't mean that it's not possible anymore that there is another wave down. It just makes it, in my opinion, way less likely. So stop loss at the low here, entering at 899, and then take profit is going to be somewhere up here, where we're again talking about 100% potential profit on the position over the next couple of months. Now, moving on, Intel, what are you doing, Intel? Intel is going further up. We actually have relatively, wait. Oh, yeah. Okay, that's one of the cases where I was partially right. So we actually got put options here, unfortunately, with the wrong expiration date. So, I mean, we picked it based on assumption that there will be a stronger move, but still got in one day too early here instead of waiting another day for this. From the looks of it, we finished our correction here because we can clearly see that we now have the next move upward started. This could still turn into some kind of corrective pattern that's followed by another move downwards, but I consider this unlikely, which means this forecast here, we fell a little bit short of our expected minimum target for the assumption that this is another free wave move down. But overall, the prediction from here was actually fairly accurate. So whoever would have shorted from here, while obviously the next day would have been in the red, but then it would have been a decent profit. In our case, however, it turned into a small loss, like $40 or $50 for the options that expired before. That expired because actually I didn't close them here, but I kept them till expiration and was actually expecting that we might reach the mark here and potentially the 61.8 retracement, which now becomes way less likely. So we can already cancel that alert. Now, basically, right now, if you would want to enter, you would need to have your stop loss at the low that we have here at 21.51, and take profit is then above somewhere here. So risk reward ratio not too bad, but also not too great. If we zoom out, it looks like we are pretty much either we're just forming an ABC, so A, B, and C, in which case it would look, we're actually going to use that as our, in quotes, forecast. So if this is wave B, and this were wave A. So if we assume that Intel is still going down the drain, then we would expect for our wave C to reach at least 25.66. Again, do we have Intel? That's actually ENTC. And so current price is there, blah, 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 is 2307. We would expect to go to 25.66 or 28.62, and that's also from today. So again, 10:28, there we go. And time, like again, can't wait for roughly 16 minutes. Okay, so Intel there. So roughly here. So wait, what? Okay, time doesn't matter right now. So, God, I hate that online Excel thingy. Anyway, so either this is the end of the overall downwards movement, in which case we're looking at the next 1, 2, 3, 4, 5. So targets would be higher, or we're looking at wave 1, wave A, wave B, wave C, which should go at least till here before we go further down. So either way, entries right now shouldn't be too bad. Theoretically, the correction could be unfinished. We will have to wait to break the 38.82 to be somewhat certain of, like to have additional confirmation. If you would enter now, technically based on Elliott Wave Theory, the stop loss would need to be down here at the low that we had at 18.51, because it could be that this correction is not fully finished and we go further down. Once we break the 23.82, we can be relatively certain that we finished our corrective pattern and could move the stop loss to the low that we had here at 21.51. And again, take profits would then be possible from here to here. Although I wouldn't necessarily take profit, but rather work with a trailing stop loss or stop manually adjusting the stop loss. Because if this turns into 1, 2, 3, then I said the profit targets would be much higher, because then we would use an extension for here to then see the 138.2, 161.8, and 231.2, 261.8 levels as our profit targets. Moving on, costs. Yeah, like not much changed. We're still waiting. We need to break the high that we had here at 879. Theoretically, this could still be 1, 2, 3, 4, 5 with a truncated fifth wave and basically already be our first impulse upwards and kind of like confirming that we are done with our correction here at the low that we had, close to the 50% retracement. But it's still also possible that the correction here isn't done yet and we'll get another push down potentially to 61.8 retracement level. We're just going to hold our shares and are going to basically wait this one out. I think long term there's more upside to come. However, it's hard to say if that will be in a day, in a week, or only in a couple of months. So this is going to be a position we'll just hold based on the overall outlook. And even if temporarily we go a little bit further down, while it sucks, then on looking at the portfolio, it overall is actually or shouldn't be that bad. Moving on to NEO, we got out. Oh, there now. Nice. I think we mentioned it last week, actually, that now we didn't reach the 61.8 retracement fully, but we mentioned it last week. I think the correction is not over yet, but we might be. It's possible, it could be that this is already ABC, but it feels to me like this is more like one movement down instead of like ABC. So this likely might just be our wave B before we get our wave C correction down. Now, yeah, overall we have what we have here is basically wave 1, wave 2, wave 3, wave 4. Wave 4, as said, might not be finished yet, so there might still be upwards movement for wave B, which should then subdivide ABC or ABC, and then we get another move further down, which might then reach the 78.6 retracement or not. There is the possibility that we're done here. Theoretically, I mean, now in the strong upward movement, I'm not sure if it makes sense to jump into that, to be honest. But theoretically, one could, as I already mentioned during last episodes, one could already make small entries, in which case the stop loss would need to be at the low that we had here at 368 to basically benefit from the upward movement. Now, personally, if you watch previous streams, you know that we personally got out of our position here and currently don't hold any Intel exposure, NEO exposure. And yeah, so we'll have to keep an eye on this. It's possible that this will already be the fifth wave, in which case it will subdivide also as 1, 2, 3, 4, 5. Then we get another correction. Yeah, so I don't expect it to rush through here without any intermediate correction. We'll have to keep an eye on the whole thing, however, so to basically monitor this. It's a little bit hard because, again, this part here does not easily visually look like a free wave move, but it looks more like some kind of, I don't know, 1, 2, 3, 4, 5 wave move or so. Although it's possible that it could be 1, 2, 3, 4, 5, ABC, 1, 2, 3, 4, 5. So in which case we have a free wave corrective pattern as ABC and would now be in the next 5 wave impulse up. Either way, I anyway don't have disposable, or not disposable, yeah, like capital in the portfolio right now. That's not bound to other positions, so it's not like I could jump in there anyway right now. Yeah, overall long term, there should still be a fifth wave. So if that was our bottom, then we would expect 788 as the target, up to 1049 for the fifth wave. And we could also use Kennedy channeling technique, in which case then, which would look like this. Let's try to see if we can actually get it done. So wave 2, wave 4, and a parallel through wave 3. So our target would be at least the median and ideally the top of this channel. Now, if we combine that with the expansions, we can see that we have a cross of the median and the middle channel here and the 100% target here. So, well, that's obviously not guaranteeing anything or so, but if we use those target areas, then one could argue that potentially if this is 1, 2, 3, 4, 5, then we get wave 2, wave 3, and so on, yeah, that potentially by November 17th, we might hit the 61.8% target area here, which would be the minimum target for a fifth wave. And if that's not sufficient for this fifth wave, then potentially here in also, all right, the overlap is both for November 17. Okay, so depending on how strong this movement is, we might already, yeah, we should finish our fifth wave if I'm reading that correctly by November 17th. We'll see how that plays out. If the corrective wave finished here, if, as I assume, this is only a part of the corrective wave, and we're right now getting 5 waves up, 3 waves down, 5 waves up for wave B before we get another wave down, then obviously we might still touch the median, but we should we will likely not reach our, not even the minimum target here. Either way, we'll keep an eye on it. And either once it's clear that the correction indeed finished here and we're in the fifth wave, we would wait for a retracement to potentially enter again, or once we have a confirmation that we have a free wave move here, we're gonna worry about the next downside targets. Moving on, Novavax, today up 5%, so that's one where we got it partially wrong and we're taking profits and or setting stop losses. Would have been the probably potentially smarter play. We basically originally got in here with our call options that expire in January. You see that red horizontal line that reflects the expiration date. Under the assumption that we have our A, B, C finished here, just to be then proven slightly wrong by getting this push down here. And unfortunately for this push down here, it's possible that it's already the last push, so meaning that we already are done here with 1, 2, 3, 4, 5, but it's also possible that we still get a fifth wave push to the 61.8 retracement. So we're just going to hold this position till the end in quotes to see how it turns out. If we still were, so if we're going up from here, we're going to get 1, 2, 3, 3, depending on how far, 4, 5. And if we're still getting another push down, we shouldn't reach, what do we have here, 12, 11. So we should get A, B, C. So maybe we go a little bit higher here. So to the, let's say 11, 11.50. And then from there, we would get our fifth wave push down to 61.8. Now after that, we should still go up. So my overall pattern still hasn't changed. There should still be more upside. The problem is, will all of that happen before my options expire or not? Yeah. So moving on, NVIDIA, slightly red for the day. We had the assumption that this might be wave A, wave B, and we're still getting a wave C. Obviously, when we had it here, it was not finished yet. Now we have a little higher point here. So right now, I think there's still the potential for extra downside. So for a wave C as a correction, that would take us down into this area at least. So 137, 67, maybe a little lower. We'll see in the next couple of days if it plays out like that. I'm actually going to write NVIDIA down as well, because that's something that I, right now we're at 141.36, and I think we should short-term see 137.67. I don't think, I mean, 134.09 would also be 34.09, and how do I write that? So like this, and and 134.09, so that would be that, and there is the chance that this is the entire correction and we're going up from here. So overall, I still think there's more upside, so based on the bigger pattern, but short-term, as said, there is the possibility that we will first retrace here. Personally, if I would have any exposure in NVIDIA, I would have my stop loss, I mean, ideally at 195, so that basically, even if we're right now correcting this whole move, that I don't risk getting stopped out, just to then see the next upwards movement. Moving on, actually SPY, we had our retracement here, 61.8%. Actually a weirdish pattern, but we have our breakout through this deceleration trend line, and while it didn't hold here, now it looks like it's getting confirmed, turning this into potential 1, 2, 3, 4, 5. So which means 5 upside would actually be the minimum target. So SPY would be that comes close. So here 587.18, 587.18, 587.18 to 595, 595.22. So however, from the looks of it, if this is diagonal playing out, then it could only be wave 1. So basically in this case, we would expect to, we might actually already reach the minimum target, but then this would, as said, turn out as 1, 2, 3, 4, 5, and that wave 5 would go roughly, like here, so here-ish in that area, so the minimum target. Then we get another correction, but that would then only be wave 1. The other option, yeah, I think the other option is right now irrelevant. So I think that's how it's going to play out. Stop loss ideally would need to be right now, if we're in this fifth wave, could be here at the low at 577.55 or 574 41 at the low here. So that basically, no, wouldn't need to be. So that has to be 1, 2, 3, 4, 5. So it can definitely be here. So 577.55 would be the stop loss to pick for any long positions. This would be then the next 1, 2, 3, 4, and 5. Maybe 4 not finished, so a little bit downside possible, but 5 should then go at least higher than where we were here. Potentially reach or fall short of a, can actually add that line. It just gets a little confusing when there's too much on the chart. Yeah, but so it should potentially fall a little bit short of that line. So if we, in the next couple of days, should actually see the 587.18, which is a 1% increase here. And that brings us to the NASDAQ, where we have new data. Yep. And where we basically reached the 61.8 retracement, which also happened to be the 100% or very close to the 100% expansion level for wave A, B, C, which makes this our next wave 1, 2, and currently wave 3 in progress. So while we are currently correcting here a little bit, so for another wave 1, 2, there should in the next couple of days and week be further upside movement. Stop loss for any long position should be at 19,933.92. Take profit, I'm not 100% sure yet, but based on this, so at least 20,700. Yeah, that sums it up pretty much for today. I hope you were able to take something away from today's stream. Don't forget, as always, like, subscribe, enable notifications. And as said, I will make sure to update my calendar so that tomorrow, again, we are actually streaming around 5 minutes before market open and not somewhere when the market is already open. And with that, I will wish you all a pleasant rest of the day, a successful trading week, and see you all tomorrow. Till then, bye-bye.